My essential trading tools and software are not the most expensive, the most complex, or the most fashionable, but they are the ones that quietly remove friction between intention and execution. Over time, I learned that tools do not create edge, they protect it. They shape how decisions are made under pressure, how information is filtered, and how behavior is constrained when emotion tries to interfere. Trading literature written by professionals rarely obsesses over software lists. For a reason, the value of a tool lies not in what it can do, but in what it prevents you from doing poorly. At the center of my setup is a charting platform that prioritizes clarity over customization. I do not need dozens of indicators or visual effects. I need clean price data, reliable execution, and the ability to view multiple timeframes without distraction. The charts are intentionally simple: candlesticks, basic drawing tools volume, and a small number of reference indicators. This simplicity is not aesthetic preference, it is psychological hygiene. Every extra element competes for attention, and attention is the most limited resource in trading. A good charting platform fades into the background so that price behavior can move to the foreground. Execution software is another essential component, though it is often overlooked by newer traders. Slippage order types and execution speed matter more as size and consistency increase. I value platforms that allow precise order placement, predefined risk parameters, and quick exits without hesitation. The ability to attach stops and targets automatically at entry is especially important. This feature removes improvisation at the most dangerous moment, when emotion is highest. Trading literature consistently emphasizes that execution errors, not analysis. Errors account for many avoidable losses, and good software quietly reduces that risk. Risk management tools form the invisible backbone of my setup. These include position size calculators, daily loss limit alerts, and account-level risk controls. I do not rely on mental math or memory when capital is at stake. Tools that automatically calculate position size based on predefined risk ensure consistency even when confidence fluctuates. Daily and weekly loss limits, enforced by software, act as circuit breakers. They prevent one bad day from becoming a bad month. These tools do not limit freedom. They preserve it by preventing emotional override. Journaling software is another indispensable element. While a simple notebook can work, I prefer digital journals that allow tagging, filtering, and long-term review. The power of journaling compounds only when patterns can be seen across time. Being able to sort trades by setup time of day, emotional state, or rule violation transforms experience into data. Trading literature often notes that most traders remember selectively. Journaling software remembers objectively. This objectivity is essential for continuous improvement. I also rely on calendar and routine tools that have nothing to do with markets directly. Scheduling software reminders and time-blocking tools help structure trading days, review sessions, and time away from screens. Trading is cognitively demanding, and without structure, it bleeds into everything. Tools that enforce start and stop times, protect energy, and prevent burnout. This boundary setting is as important as any technical tool because exhausted traders make expensive mistakes. Data and replay tools play a quieter but crucial role. Market replay and backtesting software allow me to study historical price action, rehearse execution, and test ideas without real risk. These tools train pattern recognition and expectation more than they test profitability. They reduce surprise. When a market behaves a certain way, it often feels familiar because it has already been observed in replay. Trading literature consistently shows that familiarity reduces emotional reactivity, and replay tools accelerate that familiarity. I am also selective about information tools. News feeds, alerts, and economic calendars are filtered aggressively. I want to know when major events occur, not react to every headline. Tools that allow me to control notifications and delay information intake protect focus during execution. Real-time commentary rarely improves decision quality. Software that helps me see less, not more, is often the most valuable. What all these tools have in common is restraint. None of them promise to make me smarter. They are designed to make me steadier. They reduce cognitive load, enforce discipline, and create consistency between plan and action. Over time, I realized that the best trading tools do not add capability, they remove excuses. They close the gap between what I know I should do and what I actually do when pressure is present. And it is precisely here, when tools stop being objects you collect and start becoming extensions of a well-defined process, that they earn their place in a professional trading setup. Because at that point, they are no longer there to impress or optimize endlessly, but to support clarity, repetition, and survival over thousands of decisions made under uncertainty. And this is where the deeper understanding of tools and software has not yet fully come to rest. Because once tools are chosen deliberately, the real work becomes learning how not to misuse them. This is where many traders stumble. They believe that the presence of professional software automatically leads to professional behavior. In reality, tools only amplify intent. A disciplined trader becomes more consistent with good tools. An undisciplined trader becomes more chaotic, just faster. Understanding this distinction is what separates a mature trading setup from an expensive distraction. Over time, I noticed that the most valuable tools were the ones I stopped noticing during the trading session. If a platform demanded constant adjustment customization or troubleshooting, it quietly drained focus. Tools that worked best were boring, reliable, and predictable. They did their job without asking for attention. Trading literature often points out that in high-stakes decision environments, simplicity outperforms sophistication, and my experience confirmed this repeatedly. The fewer things I had to think about operationally, the more mental bandwidth I had for judgment and patience. Another important realization was that tools must evolve with the trader, not the other way around. Early in my journey, I needed tools that helped me slow down risk calculators, hard stops, journaling prompts. Later, as habits stabilized, I removed some layers rather than adding more. The goal was never maximal control, but sufficient control. Tools are scaffolding. When behavior strengthens, scaffolding can be reduced. Keeping too many constraints for too long can create dependence instead of discipline. I also learned to audit my tools periodically, not for features, but for behavioral impact. Did this alert increase urgency or clarity? Did this indicator improve timing or encourage overanalysis? Did this news feed add context or emotional noise? Tools that increased reactivity were removed even if they were popular or powerful. Trading literature often emphasizes that what you exclude from your environment matters as much as what you include, and this applies directly to software choices. One of the most underrated tools in my setup turned out to be automation used sparingly. Automated position sizing, attached stops, and predefined trade templates reduced decision friction without removing agency. Automation was never used to outsource judgment, only to enforce rules already decided in advance. This distinction matters. When automation supports discipline, it strengthens performance. When it replaces thinking, it creates blind spots. Another subtle but critical element was redundancy. Having backup platforms, alternative data access, and contingency plans reduced stress during technical issues. Nothing destabilizes focus faster than uncertainty about execution during volatile moments. Professional trading literature often discusses contingency planning not as paranoia, but as respect for operational risk. Calm is easier to maintain when you know failure modes have been anticipated. As time passed, I noticed that my relationship with tools became quieter. I no longer looked for the best software. I looked for the least intrusive one that met my needs. This shift mirrored a broader evolution in my trading. Less optimization, more alignment. Less tinkering, more repetition. Tools became part of the environment, rather than the focus of attention. Ultimately, my essential trading tools and software did not make me profitable. They made it possible for my discipline to show up consistently. They reduced friction, enforced boundaries, and preserved energy. They protected me from my own worst tendencies more than they enhanced my strengths. And that, I learned, is the highest purpose any tool can serve in trading. When tools are selected and used this way, trading becomes less about managing technology and more about managing behavior. The screens feel quieter. Decisions feel clearer. Mistakes become easier to trace and correct. And over time, this quiet reliability compounds into something far more valuable than any feature list. Trust that when an opportunity appears, the system around you will support the right action rather than sabotage it. And that trust allows you to focus on the only thing that truly matters in trading, which is showing up with clarity, restraint, and consistency, day after day, without being distracted by the illusion that better tools will ever replace better behavior.